Hello traders, this is Alex, and in this video we're going to be comparing some brokers now that they have reduced their commission. Which one do I recommend, and how to maximize the experience as a trader or investor. So the last couple of weeks we saw Charles Schwab that they reduced their commission, matching the Robinhood type of zero commissions for each trade, and they also reduced the contract size for options to 65 cents that are now competing with the Tastyworks commission structure. And of course, E-Trade, Fidelity, and TD Ameritrade followed suit. And if you want to hear which one do I recommend, don't forget to subscribe and hit the like button, and wait till the end to see also a strategy that I like to implement to maximize the money in your account. So here these guys, the good thing about this is that they are competing now. That's good for us because they are in a price war, and we are the one that benefit. The retail traders are gonna be benefiting from this, and now they have to adjust and provide their competitive advantage. So for example, in terms of their software, to the Ameritrade and Tastyworks are going to be the best in terms of software. E-Trade and Fidelity are good in terms of their information. When you look at a quote for a stock, they give you a really nice information, and E-Trade is really nice in terms of how you visualize your portfolio. And also Fidelity give you an interest on your iddle cash, like Robinhood is doing right now. So let's compare it and see which one is better. In terms of, here you can see it's basically the same for all. In terms of options, contract fees, the cheapest one is still gonna be Tastyworks, but we go to E-Trade, for example, and you do a lot of contracts, then you can reduce it to 50 cents per contract. And in Tastyworks, they cap the commission. So here is an example. If you do a lot of contract, then you can compare and see how much you're going to benefit. So if you do 10 lots, it's not that big of a deal. But if you start doing like 50 lots or 100 lots, then it's very noticeable the difference. Even though it's not that great I don't recommend doing that many lots unless you have like a extremely big account. So most of the time it's not gonna be a huge difference. The one that I recommend really is TD Ameritrade, and the reason is because of the platform. Of course, Synchrosyn is the best platform that you can have here, and also they give you a paper money account, so you can start trading and get a feel of it for newbies, understand their software before risking your own money. So that's great. And also their mobile trader is pretty decent. It's way better than the other ones, and you don't get one in for example in Schwab and Fidelity. You don't get the mobile trader, which I think is very important. So another thing that is very good in terms of the software is that you can beta weight your portfolio. So when you learn a little bit more, you will want to beta weight your portfolio and hedge it so that you reduce your risk. So the only ones that give you that option right now is Synchrosyn and also Tastyworks. So the benefit that, for example, Fidelity and right now Robinhood has is the idle cash. You get almost 1.6% on Fidelity of the money that you're not using, and in Robinhood you're getting 2% of the money in your account that you're not using. However, this is not something that should make you have the money here. Even though they're trying to compete, it's not enough. First, the interest rates are gonna keep moving down, so they're gonna keep changing it most likely. Right now it's gonna be like 70% chance it's gonna go down again. So what can we do to take advantage of this? What I like to do is, let's say you follow my advice and decide to trade in TD Ameritrade. Let's go to the platform here. So this is the trading platform, and what I like to do is I go to SHV. This is the iShare Trust Short ETF, and you just put it right here in the quote, and right now it has a yield of 2% basically, and the dividends they're paid monthly. So in terms of risk, this is almost like cash. So buying this stock is almost like having cash. So for example, let's say you have 20,000 in your account, and you want to, you're not using all your account, maybe you're using 50% of your account, and you want to make something with the other 50%, then you can right click here and press buy, and let's say you have 100 of this ETF at this price. You hit confirm and send, and here again you see it's gonna cost you 11,000, but the commission is gonna be 0, so it's not gonna cost you anything to have that. So you can pay the $11,000. That's if you don't have a margin account. If you have a margin account, then you're gonna be using half of this, so like 5,500 or so. And then if you just need the money, you just close it, and because it's commission free, then it's not gonna affect you that much, but you get to keep the dividends. So hopefully that helps, and let you know what I think in terms of the best options right now. And again, I will say it's gonna be TD Ameritrade for their platform once you understand how to use it, how to trade options. And if you have any questions, just let me know, and I'll try my best to help you out in the comments, and I'll do my best to help you. See you. Bye.